think one of the reasons we have increased, the overall size of the offering is to invest behind the quick commerce business. We have seen, higher accelerated growth in the industry itself, and to prepare for a larger, expansion of our dark stores. One of the reasons that we have increased our primary offering.
As of September, Blinkit has around 700 dark stores. You are around 537, 540. How much you want to increase it further if I talk about 1 year or 2 years down the line?
So look, we're definitely expanding our dark store count also rapidly to keep in line with the growth ambition that we have. Even in, let's say, the first quarter results that we published, there's been some strong growth in the category, and we continue to go after strong growth. But I think the store count is going to be a consequence of the growth ambition, which continues to be aggressive. But at the same time, there is only a 3-month window between deciding to open a dark store and actually opening it. So the key here is to be agile and keep watching the market and constantly iterate on the footprint.
And also, when you take a look at your closest competitor, they've recently done a lot of diversification into their own business. Does Swiggy have any plans like that going forward? You want to incorporate a completely new segment that focuses out of quick commerce and food delivery, or are these going to be your key thrust areas or focus areas going ahead?
Look, our mission statement is all about unparalleled convenience for the urban consumer. Today we have our 3 core categories between food delivery and quick commerce and, let's say, out-of-home consumption. Outside of these, we're constantly always piloting new initiatives that can be businesses in the future. If you look at the entire history of Swiggy, constantly we've been piloting many things, and that continues to be the case even now. Even as we speak, we have pilots going on for new business lines. One that got some recent coverage was Rare, a private members club built for a slightly smaller audience than Swiggy's mass premium audience, but that can be very, very meaningful in the future. But we'll find out only when the consumer response is collected at scale.
And also, if you could share some numbers with us, if you have any targets for your GOV and take rate post the IPO, even if not numbers, how would this IPO change both of these metrics going ahead?
I think the IPO itself, will not kind of change the economics of the business. I think the economics of the business has been on a trajectory which is of growing. I think our food delivery business, got to a 6.4% contribution margin and a 0.8% positive EBITDA in quarter 1 in the declared results. And it's a combination of both our take rate expanding. We have been very successful in monetizing through the advertising opportunity on the platform. With a win-win outcome for both for our restaurant partners as well as the consumers who get access to a more number of restaurants, and for the restaurants they get a better funnel.
I will take back to you the part of valuations once again, because your shareholders would like to know, one, the timing. Of course, that is in your hand. I mean, market forces, they act independently out of your control. But your competitor has just raised money. Has it been one of the reasons of pricing part which has been done right now? Was it a consideration, or just the market forces which are happening?
Actually, you know what? One of the big, even more importantly, maybe closer to our heart, like as we've been thinking about, let's say, this journey to build a public company. It began 2 years back with this, a whole independent board of directors coming up. And it's all about feeling ready for your next phase of life as a public company. And that is the most important thing. You can go time any market you want, but you need to be prepared as a company saying, hey, this is a version that I think is ready. We are ready for the responsibility of getting a lot more stakeholders and doing right by them.
And also on the quick commerce front, once again from your RHP, what I understand is you've increased the allocation towards quick commerce than you had planned earlier. And a lot of players that were earlier into online grocery or online commerce have now started shifting towards quick commerce. What's the strategy going ahead? Because, the best we can think when it comes to quick commerce is the 10-minute delivery, which is also now happening. Does it get any better for quick commerce from here? What are the growth strategies that you have going ahead?
Cool. So I think, yes, a 10-minute is not a novelty anymore. It was a couple of years back, but consumers treat it as the new normal. What they don't treat as the new normal still is the selection that is on offer for consumers on platforms. And that's where I think we're seeing constantly the envelope being pushed on what you can get on quick commerce. Like the last launch that has been covered was a pharmacy launch that we did in partnership with Pharmacy. Now that's an example of a category that didn't exist 3 months back, but today have a chance of existing. Now, is all of that possible to be fulfilled? That's the journey ahead of us. Our job is to continuously innovate and find new categories that consumers want while figuring out how to do it sustainably.
Right. One of the questions which shareholders would definitely want to know is the path to profitability. Now, your company has shown improved performance as per RHP, the financials which has been mentioned. The losses have narrowed, revenues have increased, but still, it has been in losses since inception. So, the simple question is, when are you coming to profit?
No, I think it's a sum of parts, right? So if you look at the food delivery business, which is the more mature business, we are already profitable. That business is generating cash. It is growing at a healthy clip, and is expected to, continue to be on that trajectory of getting to steady state EBITDA, right? In the other businesses, which is the quick commerce business, this is a business that has been, calibrating both on growth and profitability. If you have seen our, contribution margin profile, narrowed down from a loss of 23% in FY23 to 6% in FY24, down to 3% in the Q1 of FY25. So as the overall business has expanded, our throughput per store has increased, the monetization levers have kicked in, the costs, levers are now already looking where steady state should be. So all these factors have, meant that the business is towards a sustainable, economics trajectory.
Would you say the cash burn that initially goes into any company when they're growing and when they're expanding, do you think that rate of cash burn is starting to come down now?
I think we have seen that. I think when, for example, in the industry, when you have seen a food delivery business, if it took X years to get to profitability, we have seen the newer businesses generate, profitability significantly ahead of that. So it's a factor of, I think, both the size of the opportunity as well as the, the economics get to parity. And we have seen that trajectory across the industry.
Let's talk in cricketing terms. Which are the categories where you see the highest growth, kind of T20 growth, and which are the sectors you say stable growth like test cricket will be there?
Yeah. No, I think T20 or ODI, maybe there are no test cricket categories that we are operating in right now. Even if you look at the
let's say who's your Suryakumar Yadav and who's your Ajinkya Rahane?
I don't know. I look at all of them very, very excited. Each of them has very different trajectory. Like I'll tell you, even the food delivery business, which today is growing slower than, let's say, a quick commerce category, but it has like a couple of decades of growth ahead of it. And I'll tell you why. I think the underlying for, either the food delivery business or the out of home is the restaurant industry. And the restaurant industry is at an incredibly early stage in India. I think if you look at maybe a country like China versus a country like India, maybe they have like 30x the number of restaurants in India for a similar population. So as our GDP per capita expands, we should expect the restaurant industry to keep growing. It's already growing at a very healthy clip of 10% plus, the organized restaurant industry, and it's not going anywhere. So our job is to build on top of these beautiful rails and keep doing what we can to increase consumption through innovation, affordability, all of these things.
Also, in the past, you've acquired Scootsie, that's worked out for you. Dine Out has been a very good acquisition for you. Are you going to be on the lookout for more acquisitions after the IPO? Is that something that's on the cards?
So if you look at our overall history, I think we have a history of building homegrown organically, but it is not because of some dogma about we will only do this or that. Because if you are the one innovating and pioneering, the first version of the category, who are you going to acquire? But at the same time, I think in the case of a Dine Out, we saw a great time to market advantage because we felt like the offering should exist and there was a company that we liked and we leaned forward and acquired it. So it is really hard to predict ahead of time if you're going to acquire, what you're going to acquire. Everything is situational based on the excitement about the markets and companies that can help us get ahead.
Right, but would you be open to?
We have demonstrated openness to.
Okay.
We'll continue to be open to it.
Brilliant. One last thing before I let you go. Which are the top 3 reasons to invest in Swiggy?
I think the first one is to just look at it as a barometer of India's consumption story. If you look at the next 1-2 decades, I think we operate in a very exciting part of India's demographic pyramid. We're offering like the top X percentage consumers of India who are, broadening their wallet share with the platform. I think that is just a consumption story, a macro story. I think the number one is we should be excited by, let's say, Swiggy's track record of being able to pioneer and innovate and get into blue ocean categories like we have in the past, and we hope to continue doing that over the next 1-2 decades as well.
All the very best for your endeavors and the IPO next week. Thank you so much for
Thank you so much for having us.
Thank you
Cheers.
so much.